Hey everyone, my name is Jack. Welcome back to the channel. I cover a variety of topics as they relate to real estate, the markets, investing, and pretty much everything as it has to do with personal finance. So if you like that sort of content, be sure to have a look around the channel, and if you like what you see, be sure to subscribe. But today I guess we could call it a Fed Friday, because I'm going to talk about some new developments with the Federal Reserve and generally what's going on with monetary and fiscal policy and what that could mean for investors and the greater economy in the coming year or two. Because yesterday we got some seemingly big news on the surface about Steve Mnuchin, the Treasury Secretary, deciding to cut the Fed's lending power as of December 31st. So when these CARES Act programs were set to expire rather than extend them, Mnuchin saying that they're not going to do that. This kind of makes sense if you assume that Joe Biden's going to be becoming president. I'd assume Steve Mnuchin would be out, and many of Trump's cabinet members would also be out. So, and maybe even Jerome Powell, the chairman of the Fed, would also be out. It's hard to say what exactly would happen, plus Biden has to officially win first. He has not officially won, but it's looking like he will. The markets haven't really reacted much to this news at all, because I think it's really not that big of a deal in the long term, because I think what's going to happen is this is just going to get reversed. But first, to see what this decision actually is, it's specifically about ending several emergency lending programs that were enacted by the CARES Act predominantly. Basically, the Treasury set up this gigantic pool of money that it was going to give to the Fed, and then the Fed could lend it out to businesses, to corporations, to whatever it wanted to lend to, including entities that it set up itself to then buy securities. A lot of money flowing into the Fed and out of the Fed to try and get the reins over the economy, I suppose, get the reins over the financial markets to try and keep things from falling into despair. When you look at how the emergency lending program's been set up and how it's really been enacted, it's really a form of central planning. It's the central planners, the Federal Reserve, as well as the Treasury, deciding who is a winner and who is a loser by sending them loans with taxpayer money, or if it's not taxpayer money, then it's printed money from the Fed that then is paid for via inflation. I think this move really is just trying to re-centralize control back towards the Treasury rather than to the Federal Reserve. That's my best take on what this is, since it seems like everyone's on the same page in government that we need the Fed and we need more spending of some sort. They disagree on how to carry that out exactly, but it seems like leaving this lending arm open makes a lot of sense given their policy goals. I'm not saying it's good policy, but that is what they want to do. So I'm not really sure what Mnuchin's trying to achieve here, other than maybe just kind of throw the hot potato onto the next administration, saying, hey, I'm not renewing this, you have to renew it yourself, and then it'll be on you from there. Something like that, I'm not too sure. But that's another thing about this decision. All the next administration has to do is renew these lending programs so that the Fed can continue lending to businesses as it sees fit, and lending to its own entities to then buy securities or whatever. There's a lot of different things that the Fed does. This is just one of many, so the Fed would still be very powerful. Don't worry about that. It's still going to be able to buy all the new Treasury bonds that come out from any federal spending that we get, and even a lot of state spending as well. The Federal Reserve has been instrumental in buying so much of the national debt and a lot of state debt as well, in propping up the financial markets right now despite their horrific fundamentals. But because we have the Fed here as a backstop, it's using inflation to help drive up the financial markets when they otherwise would go down. Looking further down in this article, it talks about how the Fed has only loaned $25 billion of its $750 billion fund that the Treasury gave it to loan out for these emergency lending programs. One of those programs is the Main Street lending program, which has gotten a lot of heat recently because that's the one that's supposed to be lending to small and medium-sized businesses. And there's apparently huge demand for these loans because so many businesses are hurting throughout the country, mainly because of lockdowns, also because a lot of them are leveraged as well. And apparently the best solution to a debt crisis is to throw more debt at it. At least that's what the approach has been for the U.S. government and for the Federal Reserve for quite some time now. We've had massive deficit spending for quite some time. Debt levels have been continuing to rise even after the Great Recession. There was no reset there. All we really did was threw more debt into the fire, and it ended up putting it out for a moment. But now there's a lot more, I guess we could say, fuel for that fire for the next coming collapse, whenever that might be. But the current state of affairs cannot go on forever. There's just no possible way, at least without significant negative consequences. And it's not like this money is going to be used towards funding operations. It's going to be used for some other program. It says right here that it's going back to the general fund that Congress already funded that it gave to the Fed, funding it with bonds that probably were bought by the Fed in the first place. So it's kind of this circular system anyways. But that means that the Treasury, and therefore Congress, the executive, would get this money back that it could then use for some other program. Maybe not the Fed's program. Maybe it's some other direct spending program from the Treasury. I don't know what it's going to be. If this will be under Trump's watch, I don't know. But it's not like the money's just going to go and be spent necessarily responsibly. It's going to be used for some other program that we don't have the money for, and that hasn't really been a problem for the government yet. It's continued to fall into massive deficits at levels we've never seen before. And I'm not saying in the short run this would be good for businesses to basically rip the Band-Aid off and take away all this money, but the thing is, it's making the long-term crisis, the tornado that's been building, much worse. The more debt we throw into this pile, the bigger that pile is, and when it eventually goes up in flames, which it seems is more and more likely as we just put more and more debt in here, despite the fundamentals not really improving, it's just adding risk to everything, the entire system. Adding debt to anything will increase the risk of any investment. That goes for investing into the broad economy as well. You need everything to go well if you're going to be able to pay down this debt. And eventually, if you get too much debt, it becomes unpayable, and the debt load itself weighs down the entire economy, individuals, businesses alike, and even the government. The difference is the government has the means to print via the Federal Reserve, so it can print money out of its hole, but that's going to leave consumers, especially those without assets, in a terrible position, since inflation will eat away their purchasing power, it will destroy their savings, and if they don't have assets that were able to rise in price with inflation, they're in huge trouble now. So my final take on this, at least given what we know now, I think this is not really going to do anything. The next administration will probably just reopen this program or do some substitute program that's very similar. I don't think the Federal Reserve is going to have its powers curbed anytime soon because, well, the government frankly relies heavily on the Federal Reserve right now to pay for its operations. I just did a video recently about how all of the U.S. bonds from the CARES Act, or at least effectively all of the bonds on net, $2 trillion from the CARES Act, was essentially absorbed by the Federal Reserve. The Federal Reserve took on $2 trillion in federal debt after the government spent $2 trillion in its deficits in the late spring of this year. So the Federal Reserve has been instrumental in allowing the government to spend well beyond its means. So I think it's very much against Congress's interest to limit the power of the Fed. So it might just be an effort to kind of centralize a little bit more control into the Treasury's hand. But again, I think it's just going to get reversed in some other name when the Biden administration rolls around, if they don't just extend it, again, assuming Biden wins. Now, another piece of Fed news this week was actually that Judy Shelton, who was nominated to the Federal Reserve Board, was denied by the Senate on a procedural vote. She did not get enough votes to move forward with getting a nomination onto the Federal Reserve Board. And she's an interesting character. I did a little background research into her. She is, at least formally, was very much a proponent of the gold standard, which frankly is probably what the Federal Reserve and our overall monetary system needs at some point. It needs something that can at least ground the Federal Reserve and therefore, by extension, ground government spending to avoid an inflationary spiral or some sort of global monetary reset that would hurt the U.S. most of all. So it seems like that's what she wanted long ago. She has a couple books on similar topics from a couple decades ago, really, so they're a little bit old at this point, but the fundamentals I would think would be the same now, since it's not like we've suddenly moved away from fiat currencies. So it seems a little odd that she said she was on the gold standard long ago, but then she kind of retracted that in her hearings, I think trying to ally to Trump, who was the one who nominated her. So I don't know what she actually believes in, or how her policies actually would be. She seems to show that she'd be for a gold standard and much tighter economic or tighter monetary policy. It would probably be better for the long term. But at the same time, she says at these hearings that she wouldn't do that, and she's totally fine with keeping interest rates low and all these things that the Fed has been doing. So I don't know what side is the truth, because both can't be correct at once, at least I would think. So I don't know what she actually believes. Fact of the matter is she did not make it forward since there weren't enough votes to get her towards her nomination. It'd be interesting to see what the Biden administration would do with the Federal Reserve Board, who they would put in place for some of the Trump appointees. I'm not too sure, and I'm not sure that Jerome Powell will last as the Fed chair because of that, since there is a lot of executive authority over the Federal Reserve versus to who's actually running it. So I don't know, though, because Jerome Powell has been pretty much in stride with whatever Congress does. He's been begging for more spending. Biden's administration would definitely call for more spending. So I don't think it would be too counterproductive to leave him on there for the Biden administration. I don't know if we'll get a new Fed chair. I assume we might, just because anything associated with Trump for the Democratic Party seems to be a big negative. I don't know if that's going to carry into the Federal Reserve as well. Again, assuming that Biden wins. But anyways, that's all I've got for today. I just wanted to give a quick update on what the Federal Reserve has been doing, or really what's happening to it in this recent week, since I think it's very important to pay attention to what it's doing, given its massive impact that it has not only on the monetary system, but on the financial markets, the economic system in general. It has a major impact on it that has continued to grow for many years. Anyways, that's all I've got for today. If you like this video, please like it since it helps the channel out a lot. If you like this sort of content about the Federal Reserve, the financial markets, the economy, investing, definitely subscribe so you don't miss any new updates since I put out new videos every single week. And check out my affiliate links in the description below to get some free stocks with Webull and Robinhood. It's a win-win. I'd get a free stock, you would too. Might as well take the free money while it's there. But until next time, take care.